Now that Fed Chair Powell's Jackson Hole speech is in the rearview mirror, what's next for the Fed? Joining us now is Krishna Guha, Evercore head of global policy and central bank strategy, and head of that team, and a former New York Fed vice president. Krishna, you say Powell sounded especially hawkish when talking about the upside surprise that we've had on growth. So what are you looking or going to be looking most closely at in the next labor report?
Well, I think that really the only part of Powell's remarks that you could remotely characterize as on the newly hawkish side was that language around growth, where he clearly indicated that there are limits to their tolerance for that upside surprise in growth, concerned that that could, if it went too far, reignite some inflation pressures, also potentially stall out or reverse the labor rebalancing. So that's obviously something that we're going to need to keep under close observation. But this was not a hawkish set of remarks overall. The tone was hawkish. The content was very moderate, middle of the road. This feels like a Fed chair to me who thinks more likely than not he's done here and shifting carefully on hold.
Yeah, and so that's got me thinking about that next jobs report coming out, because that's pretty important data if you're drawing attention to wages in the services sector, and you're concerned about the impact of growth, especially as we're getting new strike authorizations, it seems, just about every week these days.
So I think that's right, but I think we also need to pay attention to the language Powell used about the fact that, having done a lot of work already, the Fed could, quote, proceed carefully. He said that at the beginning of his speech. He said it again at the end of his speech. What that is telling me is that they are not expecting to go again in September unless something forces their hand. Maybe November, maybe December. My best guess, they're done here, but certainly Powell's keeping that option open, in part because he wants to monitor where that growth data is going, but carefully suggests a fairly high bar for doing anything at that next meeting.
So what forces their hand if something does?
So again, I don't think they're going in September. I don't think they're probably going at all. But this formulation is one where you'd want to accumulate some evidence. So what would force your hand to go quickly, so say in September, rather than accumulate evidence and then make that call for November or December? It would have to be something pretty blowout, I think, by way on the labor side, or some unforeseen big setback in terms of the next inflation print, the sort of thing that would set alarm bells ringing at the Fed, that the growth surprise isn't just staying in growth space, but it's starting to move either labor or inflation or both in the wrong direction.
So that points to labor and CPI. And aside from that, I mean, those are, I guess we'll get a little bit of that at the end of next week. But what besides that? Nothing really? We're just watching corporate earnings then, you think, to understand what's happening in the economy?
I think we certainly want to be keeping a close eye on corporate earnings, as you and your colleagues do so well. My read on today is that, in truth, this feels like the beginning of a transition to rates on hold. And so the question is, does the data continue to support that going forward? Powell gave us some tripwires that could force them to come back in and hike again. If that growth acceleration gets out of control, threatens to push inflation back up, if the labor data turns back the wrong way, perhaps because of too much growth. But the default path to me looks like a transition on hold. And there you hear Powell saying all the predictable stuff about how they'll set a high bar for cutting rates, how they won't cut until they're confident inflation is going back to target. What would you expect? Of course he would say that. In expectation, they're on hold for a long time. After the fact, they'll be flexible. If inflation comes down faster, they will cut sooner.